All right, thanks for joining us. My name is Jake Bentz with Rise Select. I handle the investor relations side of our business. And with me today is Nick Martinez. Nick is one of the investors that has invested in. Nick, how many properties have you invested in now?
I think it's up to 10 or 11 now.
All right, rock on. So what we're going to do today is I'm going to give you a brief history on Rise Select and kind of talk a little bit about our strategy, and then we'll talk about our current investment opportunity, which is the West Plaza Flats in Kansas City. Then I'm going to turn it over to Nick so he can share with you a little bit more about his investment experience with us. So before we go any further, I do just need to cover a disclaimer here real quickly. Rise Select is not here to provide any tax, legal, or accounting advice. So please seek your own professionals for those needs. We are here solely to talk today about investment opportunities with Rise. Rise was founded in 2014. Ryan and Gopal, they teamed up to purchase 8 properties totaling 300 units. They pivoted into student housing in 2020. And today they have a total of 110 million in assets under management with 18 properties and 4 full cycle projects. So in each of their projects, they've managed to double their investors' money, and they are consistently exceeding projections. Today, we'll explain to you a little bit about our strategy. So why it is that we focus on student housing is because we really understand college students and what it is that they're looking for, how to market them, how to keep them safe and happy, and really importantly, we get a high rate of renewals from that, and that helps us succeed with. We focus on underperforming properties primarily, so we're looking for properties that are generally at about 70% occupancy or so, or sometimes lower than that, as you'll see in today's opportunity. By improving the management and marketing, we're able to increase the occupancy and increase the NOI to generate more profitability on the property. So our founders are our largest investors. That is a very big asset for us. They're very risk averse. They have built an incredibly strong team and they have a dedicated process. The due diligence that is done in our acquisitions is pretty impressive. It goes very deep. The most important thing that I found is the fact that Ryan and Gopal, our founders, they have skin in every game. So they are the biggest investors in every deal that we do. Nick, do any of these properties look familiar to you?
Yes. Yes, they do.
So Heartland Village, did you invest in Heartland Village?
I did.
In December of 22, we sold Heartland Village for 12.8 million with a gross profit of 3.5 million in 4 years. So that more than doubled our investors' money. Any investor that would have invested 100,000 in that would have come out with $202,813, if my math is correct. So our target ROI and our equity multiplier were both exceeded, and they're exceeded pretty consistently. So you'll see it in our other properties that we've gone full cycle on the same thing. Nick, were you involved in any of these others?
Briarwood and I believe Fox Valley.
Okay, tremendous. Yeah. Pretty quick turn to get a 112% profit on that deal. So sometimes that happens, not always. We usually target for about 5 years. And if we're able to sell it at a great enough profit after a couple of years, we'll do that. Sometimes we have to hold it a little bit longer, but we are always looking for the maximum profitability on these properties. So let's jump right into West Plaza Flats, the opportunity that we're currently offering for investors. In Kansas City right now, they're experiencing tremendous growth with a big tech boom. Google just built its new their new data infrastructure there. Panasonic has a new EV battery plant. Lots of great growth in Kansas City. Country Club Plaza is near West Plaza Flats. The historic Westport is near West Plaza Flats. It's an extremely pedestrian-friendly area with a walk score of 90 and public transit nearby. The student population is probably what's most impressive. Uh, there's over 20,000 students near West Plaza Flats, and that's combined through the KU Medical Center, the University of Missouri, Kansas City, and then Rockhurst University. So a really good student population for us to market to, and lots of grad students and med students in the area. Beyond that, there are also a lot of professionals that work in the area, and so we'll be able to market to some of those professionals as well. So the property itself was built in 2024. We just acquired it as a new build, and we got it for quite a discount from the cost of construction. So we ended up purchasing it at 44% less than the cost to build. So really, really great acquisition going into it already. Has 102 units with 344 beds. Why do we talk about beds? The bed count is significant because we are able to rent properties for more when renting per bed, and that's why it's so advantageous for us to market to college students. There are 175 parking spots in an enclosed parking garage, secured, accessed by key fob. It is a Class A building, and it's loaded with amenities. So there are stainless steel appliances in each apartment. Every bedroom has its own private bathroom. So I don't know about you, Nick, but when I went to college, we didn't have that. And now my kids are living in apartments where they each have their own bathroom connected to their bedroom. So a little bit different. Did you experience that at all in college?
I had a dorm room that was a suite, so you actually got your own bathroom, which was great. And then after I moved out of the dorms, I decided very clearly that I didn't want to live in that situation, so I always had my own bathroom.
Perfect. Perfect. Yeah. So it's tons of amenities. We've got private patios, common area lounge. There, there's bike storage and a rooftop patio area, and we are gonna actually be adding some more amenities. I'll dive into that here. Here's just a visual on the exterior of the building and then some of the interior. You can see the units, the stainless steel appliances, nice open space, lots of natural light in the apartments. And then this space here, we have a good amount of commercial space that we have for expansion. So looking at expanding with a coffee shop and a gym. So I'll talk more about that in just a minute here. So the commercial concepts that we've got are kind of a coffee slash convenience where our residents will be able to swing in, grab a cup of coffee or grab a quick bite to eat, and then putting a gym into the space as well. Now, we plan on partnering with existing coffee shop or gym that we can lease to, and that's going to generate potential of an additional in income for us annually. So really looking forward to finding the right partners to get that built out. Here are some other conceptual images of the amenities that we're going to be adding, such as EV stations in the garage to charge electric vehicles, a pool and lounging area on the rooftop, a golf simulator, and then more importantly, probably most importantly, the computer and study room for the students. We are also building out currently our leasing office space. So, Nick, did you have a golf simulator in your apartment?
Never, never. That'd be cool.
Yeah, yeah, pretty impressive. One of the first things that we're going to be doing with West Plaza Flats is rebranding it. This is currently underway. They are getting rolling with the lease up on it already. So let's jump into the actual structure of the investment and the returns. So one thing to note is our investors are paid their full preferred returns, and then the investors receive their capital back. The general partner is not going to receive any share of the profits until the investors receive all of their capital plus the preferred returns. The preferred returns are correlated to the amount that is invested. So somebody investing in tier C at $25,000 is going to have a preferred return of 9%. Investing 50,000, you'll have preferred returns of 11%. And anyone investing 250,000 or more will see preferred returns of 13%. Now, at the tail end, when we sell the property, there is a split of the profits. And so again, for that $25,000 investor, that profit split is at 40%. For a $50,000 investor, the profit split is at 50%. And for a $250,000 investor, that profit split is at 60%. Now, one thing that I do want to note is when it comes to preferred returns, those distributions do not happen immediately because we are purchasing underperforming properties. That means that we need to get the property up to a cash flow positive point, and then at that point, the general partners will decide when and how much cash to distribute. So we want to stabilize the property first. And the reason we do that is because it gives you greater returns on the back end. You have a much better chance of having a greater return on the back end if we wait to start those distributions until after the property is stabilized. That might not be in the first year, might happen sometime between year 1 and year 2. Totally depends on the situation with the property. Unpaid preferred returns do accrue. So even though you may not be seeing those returns on day 1, you will start seeing those returns eventually, and they are accruing over that period of time. And then they are paid in the following years. And the higher the cash flow on the property, the higher the return you're going to receive as we attempt to catch up on those unpaid preferred returns. Preferred returns are accrued cumulatively, not compounding. So keep that in mind as well. Historically, we have achieved full preferred returns by the end of year 2. Investors get to choose their returns monthly, quarterly, or as annual distributions. Now let's take a look at the projections real quick on West Plaza Flat. Your projected return on investment based on a 5-year holding for that $25,000 tier, you're looking at 19.1%, the $50,000 tier, 22.6%, and the $250,000 tier, that ROI is projected at 25.8%. That equates to return multiples of 2.0, 2.1, and 2.3 respectively. Nick, do you recall what your highest equity multiplier was with any of the deals that you've done?
Shoot, at least 2.3, at least the high end of that.
Okay. Rise has been blowing their projections out of the water. By the end of projects, we're finding that we're very heavily exceeding those projections. So, but that being said, always know that there are no guarantees. You are investing in real estate. We have a great track record because we do a lot of due diligence on the front end. We buy it right, manage it right, and get it sold at the right time for the right price. So here's a quick idea of what an investment looks like using a $250,000 investment cycle. So money in at $250,000. First year is when we're revitalizing the property and getting things fixed up, fixing the management, increasing the occupancy, and you're going to see a preferred return of about 13%, again, once that property is stabilized. So year 2 to 3, you'll see that stabilization where the improvements are done and things start to align with our projections. Years 4 to 5, we've leased up 344 beds with opportunity for additional income, and the ground floor commercial spaces are leased. That's the idea. And we're projecting that years 4 to 5, we've got that lease up and hitting all those projections. And then year 5 at the end, and possibly sooner, possibly later, we look to exit the property, and we're looking to exit that property with a handsome return. So if you had money in at 250, after we sell it based on our projections, you're exiting with 575. These are projections. So again, no guarantees. They are all based on our projections. And so far, so good. We've been hitting our projections well and exceeding them, as I mentioned. So I'm gonna turn it over to Nick here. Nick, you have invested in plenty of things other than real estate. Is that fair to say?
Uh, yes, very much so.
Tell us a little bit about your history as an investor.
Um, from startup companies to individual stocks, mutual funds, individual properties, Airbnbs. Um, I think my hobby as a 21-year-old was how can I start a business? How can I create a business? I became an airline pilot and a lot of time sitting flying airplanes, became an entrepreneur. And as an entrepreneur, I'm always looking for opportunity. I'm looking for asymmetric return. And I've just tried it all, whether it's cryptocurrency or the latest stock or the latest real estate trend, or small business startup. I've kind of dabbled in all of them.
So we've noticed here that you're not the only investor to reinvest with us. Why do you think it is that so many of our investors reinvest in other projects?
Oh, and it's simple. If you invest in something and it goes up in value and you make money on it, and you didn't have to do a lot to get that return, and it seems to be better than anything else that you're doing, you generally want to keep doing more of it. So when I invested in my first property, it was the first one that Rise did back in 2018. I wrote a check for a little bit of money. I had no idea if it was something that was going to be huge or not. And they stayed true. You know, the neat thing with Rise is they've always under promised and over delivered. So all the projections that I see on this, I'm like, well, everything that I've done has actually beat that. So I don't suspect that they're going backwards, but they've never tried to hard sell me and say, oh, you're gonna get this, you're gonna get rich. It's really more of this is what we're doing, these are our fundamentals. And I think my favorite part, honestly, is that I don't actually have to do anything but write a check.
It is nice to invest in real estate hands-free, right? You've invested in how many properties with us so far?
I'd have to look at, I think 10 that have closed, and maybe there's one more that's hopefully closing here in a little bit that I'm investing in.
All right. All right. Sounds good. And that being said, one thing I forgot to mention earlier is we have already closed on West Plaza Flats, but we have extended the investment window. So there is still time to invest on that. So feel free to reach out if you are interested in investing in West Plaza Flats. We're really looking forward to getting the ball rolling with the lease up here. Things are off to a really solid start. And if any of you have any questions, please reach out to us. You can reach me at 507-500-RISE. You can also reach us at invest@riseselect.com. Nick, thank you so much for your time today. I appreciate you coming on and sharing your experience with us.
Absolutely. My pleasure.
All right. And again, if you have any questions or any interest in investing with us, whether it's on West Plaza Flats or another one of our properties that's coming down the pipe here, we do have others in the works as well. So thanks for your time, and we'll talk to you all soon. Thank you.